Hello once again, I'm back. So are you all excited with this great new product? I'm sure you will be. Now let's do a quick recap of the key features and benefits of Maharaksha Supreme. We all know price and buying decisions are closely related. We all know that the defining moment for a pure term plan is its premium rate. You have seen the premium rates of Maharaksha Supreme. It is one of the most competitive term plans for face-to-face sale in the industry. We have studied price points across industry for face-to-face term products at various age and term combinations. We have separate smoker and non-smoker rates. Across over 80% of modal points, that is a combination of age and term, our non-smoker rates are amongst the best three. We also have lesser rates for female lives. So, if you are a non-smoker and a female, you have the most preferred rate. You have also seen that for similar premium amounts, the protection available under Maharaksha Supreme are in some cases almost double that of the protection cover available under Raksha plan. Is that not great for minding the gap? And your favorite subject, commission structure. Even the commission structure is the most attractive possible. Compared to Raksha commission rates, are they not better? So guys, it's a win-win for your customer, more life cover at cheaper rates. It's a win-win for you, more earnings for the same premium. You have seen that this plan has two options. Option 1 is the pure protection cover, and option 2 is the extra protection cover, which has inbuilt waiver of premium benefit in case of total permanent disability. In my opening session, if you recollect, I had said that we are in the business of providing financial protection against the ifs of life. Option 2, with inbuilt waiver of premium benefit, ensures that we are providing financial security to our client's family against both the ifs, death and disability. I am sure that you would have also noticed that the additional premium to be paid in option 2 is minimal, and you get a 2% extra commission for the same. To offer complete gap protection, please make sure your client selects option 2. It is more prudent for the client and better earnings for you. The next important feature I want to highlight is the Life Stage Plus option. As is very evident, it talks about increased life cover across life stages. This feature, if chosen at inception, please remember you have to choose this feature at inception, will allow the customer to increase the life cover, which we call sum assured, by up to 50% of the basic sum assured in the event of marriage and birth of 2 children, subject to an overall maximum of 50 lakhs. What's more, for these increases, no fresh medical underwriting is required. We all know that with increase in financial responsibility, there is also a need to increase life cover. This feature ensures the same can be done without the hassle of buying another plan and having to go through medical underwriting once again. Please do not forget, once again I am repeating, please do not forget that life stage option has to be selected at the time of purchase only. So don't miss this. In your sales pitch, do highlight the payout accelerator benefit, which is available in both options and provides accelerated payment of 50% basic sum assured in case of terminal illness. You can also make the protection cover more comprehensive by attaching the riders available with this plan. While attaching riders, please remember, you can combine the ADB rider with ADDS rider, but ADB rider cannot be combined with ADDL rider. The riders make this a comprehensive protection plan. I am sure you will agree that your plan has every possible feature to make a protection sale easy, right? We have considered all your feedback in developing this plan, especially with regard to what was not there in Raksha and what is available in the market. we have given a wide range of terms, we have a wide range of entry age, and above all, we have also added the single pay option. What's more, we have surrender value factored in for single pay. Wow, is that not great? How the surrender value is calculated is given in the screen behind me. That was Maharaksha Supreme for you at a glance. Now, it's quiz time. So how was the quiz? Must have enjoyed it, right? By now, all of you must be really excited about reaching out to your friends, relatives and clients and help them mind the gap. The next obvious question is, how to find the gap? That is, how to calculate the adequate life insurance cover required by someone. We will be discussing two simple methods to find the gap. The simplest method is called the underwriting thumb rule method. It's a three-step process. The first step is to find the net annual income. For this, you need to deduct the annual personal expense from the annual income post-tax. In the second step, you have to find the multiple of income as per your age in the grid given in the slide. As you can see, at a younger age, we use a higher multiple. That's because one has more number of income earning years to protect and hence needs higher cover. In the third step, we multiply net annual income derived in step 1 by the multiple. This is the amount of life insurance cover required as per the thumb rule method. Let's understand this with an example. Rahul Goenka is 35 years old. He has an annual income of 5 lakh and his personal expense is 1 lakh. As per step 1, the net annual income is 5 lakh minus 1 lakh, which is 4 lakh. This is the amount that needs protection. As per step 2, we find that at his age, which is 35, the multiplier is 14. So in step 3, we will multiply 4 lakh by 14 and we get a figure of 56 lakh. Hence the life insurance cover required for Rahul is rupees 56 lakh. Simple? Let's practice them. Let's see who gets it first. By now, you must be feeling confident about the thumb rule method of finding the gap. This method is simple, but it gives an approximate figure. And it does not take into account debts, loans and EMIs. We all know that income needs to be protected. In life insurance, we also say that one needs to cover the debts first. So let's learn a slightly more detailed method to find the gap. I promise this would be simple too. This method, we have to master the art of asking the following 5 questions. So listen carefully. The first question is, what is your total monthly household expense? The second question is, what is the total monthly loan EMI you pay? The third question is, what is your total outstanding principal for the loans taken? The fourth question is, what is the long-term fixed deposit rate you expect on your corpus? And fifth question is, how much life insurance cover you currently have? Let's understand the calculation with an example on Find the Gap calculator. Please ensure that you have got the handout called Find the Gap in your hand. The calculator is a simple one-sheeter, and if you just follow the steps one by one, you can find the gap easily. Let's work on an example together. I have with me Sanjay Mukherjee, and I will take you through this gap calculator with Sanjay. Sanjay, what is your total monthly household expense?
60,000.
Okay, thank you. What is the total monthly EMI you are paying if you have any loans?
20,000.
So now we will calculate the net monthly household expense is 40,000, which is the monthly household expense minus the EMI. So you must be wondering, why did I subtract the EMIs? Please understand, when we cover the gap, we ensure that the debts are also covered. So if the debts are covered, in case of death, the loan will be repaid from the corpus. So the EMIs will stop. Therefore, EMIs are always reduced from the monthly household expense. Okay, after we have done, now we know that the net monthly household expense of Sanjay is 40,000 rupees. So the net annual household expense would be 40,000 multiplied by 12. So that comes to 4,80,000. Now we'll ask the third question to Sanjay. Sanjay, what is the long-term fixed deposit rate you expect on your corpus?
5%.
5%. So the cover required to protect the net annual household expense of 4,80,000 is 4,80,000 divided by 5%, which comes to 96 lakh rupees. Now I'll ask Sanjay the fourth question. What is your total outstanding principal for the loans taken?
18 lakhs.
So as we said, we have to take life insurance for the income we have, and we need to cover the debts. So the life insurance requirement for covering the income was 96 lakh. His outstanding loan or debts is 18 lakhs. We have to add these two and it becomes 1 crore 14 lakhs. Now the last question. How much life insurance cover you currently have, Sanjay?
8 lakhs.
So the total requirement was 1 crore 14 lakhs. He already has 8 lakhs cover. So what's the net life insurance cover required by Sanjay? Is 1 crore 14 lakhs minus 8 lakhs, which is 1 crore 6 lakhs. So this is the gap in Sanjay Mukherjee's portfolio. Is that not simple? Now let's get down to doing some more examples on your worksheets with your trainer. By now, we all have understood the following. Potential of protection sale in India, the India protection gap, Maharaksha Supreme product feature and benefits, and how to calculate the protection gap of a client. The next question is, who to approach? That brings us to the target group definition, or what we call TGD. The basic premise of life insurance is, if there is income, it needs to be protected. Our target group for protection sale is between age 25 to 45 with an average annual income of rupees 3.5 lakh or more. Let's understand the life stages and needs of our target group. The first group is young and unmarried in the age group of 25 to 30. At this stage, people start earning, may have dependent parents and siblings, and also start saving for future. As the age increases and life stage changes, the responsibilities and the need for insurance increases. Let's see how the Maharaksha Supreme with riders can be pitched to various groups of our target audience.
Now let's look at the features of Maharaksha Supreme, which will help us position this product amongst the women's segment. Premium discount on female lives. Comprehensive coverage to protect family standard of living at very competitive premium rate. Easy loan processing due to life insurance coverage. Ability to afford best treatment in case of surgery. Option to increase life insurance cover at different life stages without medical underwriting. Financial independence in case of critical illness. Availability of lump sum amount for treatment. Now let's look at the features of Maharaksha Supreme that will help us position to one of the most important segments for life insurance, married with family. Comprehensive coverage to protect family standard of living at very competitive premium rates. Easy loan processing due to life insurance coverage. Protect family standard of living in case of critical illness and surgery due to the availability of lump sum amount for treatment. Now let's look at the features of Maharaksha Supreme that will help us position this product to the young and unmarried. Ensure insurability at very low cost for a longer term. Option to increase life insurance cover at different life stages without medical underwriting. Financial independence in case of critical illness. Availability of lump sum amount for treatment. And ability to afford best treatment in case of surgery.
I'm sure that by now, you must be raring to go out and meet your prospects and existing clients to calculate the protection gap, presenting them with this wonderful solution called Tata AIA Life Maharaksha Supreme. You are armed with two tools by now: Find the Gap Calculator and Tata AIA Life Insurance Maharaksha Supreme. The good news is, I have two more simple but great tools for you which will help you win over clients and manage their objections as well. Your trainers must have handed over these tools to you. Let's look at each together. The first tool emphasizes the concept of standard of living and the need for protection. For people who believe they have enough insurance, you can at a glance show what is the monthly income they can expect from a life cover of 50 lakh or 1 crore. It will help you convince them the need to have at least 50 lakh cover or more. The obvious thought process at this point in the customer's mind would be the cost. When you turn the tool, you will get the premium rates for some sample age and term for a 50 lakh and 1 crore cover for both options of the plan. This tool will help you handle the apprehension regarding affordability. But these still remain.
Why do I need insurance?
I don't want to talk about death.
So you have heard the myths again. Now let's look at the second tool in your hand. This tool is called Mind the Gap tool and will help you address the myths which you just saw again. Here we give figures that say that for every 100 rupees required for protection, only rupees 7.4 is spent on it. There is a 92.6% protection gap, which is most likely true for majority of our customers. As you turn over, you get the realities we spoke of earlier to address the mindset that nothing wrong can happen to me. Let's see a role play to understand how to use these two tools in a call. After you see the video, you must take time to practice yourself. Remember, practice makes a man perfect.